Good morning, and thanks so much for tuning in. You're watching BQ Prime. This is Straight Talk. My name is Alex Matthew, and with me is Hiral Daria. Morning, Hiral.
Good morning, Alex.
There was that lovely quote yesterday. If you looked up at the moon in the evening, you'd see India there.
Absolutely. And I think that was something where we were on a complete different high in yesterday's session, but clearly markets are not mirroring that yet.
Yet, let's see how it is, whether it's astronomic or not. Chances are that it won't be. But interestingly, yesterday, one particular pack was rocketing in trade, and that was the banking pack, and particularly the PSU banking pack was also witnessing quite a bit of strength. It ended with gains of over 1.5%.
Absolutely. It's interesting to see because that entire segment is going to be in focus today as well. It is weekly expiry. And clearly it's banking that has come to the forefront as well. So we will keep our eyes on the space pretty closely. In fact, we will be speaking to an analyst as well to understand where the bets should lie. But clearly, if you see from a market perspective, a good steady up move is what we saw in yesterday's session. And there is some bit of momentum that's picking up in the power pack as well as in the capital goods sector as well. So those are pockets which are seeing some buying interest that is coming in. If you see very quickly from a F&O and a technical perspective in today's session, clearly the Nifty futures open interest data is indicating a build-up of fresh long positions, and this is happening since the 16th of August. Now, it has remained quiet for the past three trading sessions, though. Now, there is consolidation between those 19,300 to 19,500 kind of a range in terms of Nifty 50, and this has remained the range over the last 7 sessions as well. Now, the maximum OI in terms of the call side on Nifty has been placed at 19,500 strike, and there has been short covering also at 19,500, which could probably result in a sharp up move on the upside ahead of the weekly expiry. If you talk about Bank Nifty, as Alex was mentioning, it actually broke out of that 43,700 to 44,100 kind of a range. And we closed little below that 44,500 mark. We did see an up move of almost 486 points on Bank Nifty. Now, the 50 DMA and the maximum call OI in terms of Bank Nifty, that is placed at 44,500. So watch out for this level pretty closely in trade because this is actually going to set the trend for the next leg of the rally in terms of Bank Nifty. So overall, all eyes now are on Bank Nifty and how supportive it becomes to get that next leg of the up move in terms of the markets, Alex.
Absolutely. And I think it's a perfect time to have the conversation about the fundamentals in the sector because the way that things have gone over the past couple of months, PSU banks seem to be coming back to the fore, and whether or not they have the legs that will take them past the kind of trajectory that has been seen for their private sector peers is a question that we're asking, whether you should consider adding these to your portfolio. We've got Rahul Malani, who's the Deputy Vice President at Sharekhan, joining in. Rahul, thanks so much for taking the time and good morning to you. We'll delve into some of these very key metrics. But what I was focusing on in the first quarter, if I look at the likes of SBI, PNB, BOB, and a few other public sector banks, is that credit growth is looking very healthy, mid-teens. What is your analysis of how these banks are growing right now?
So, first of all, good morning. So we believe that top five PSU banks have, in terms of return ratios, there is not likely a re-rating because return ratios have been moderated. But in terms of lower tier PSU banks like Bank of India and PNB, we believe that there is a strong case for re-rating in these stocks because here, if you look at the asset quality trends, are quite encouraging and will help in faster normalization of the credit cost. Here, the normalization of credit cost has not happened in FY23. So we believe that lower slippages trends which we had seen in FY23 is expected to fall even more in FY24 and which is likely to narrow the perceived gap in the underwriting versus the peers. So we expect credit cost to fall significantly because overall the stress is related to the back book, which is net NPLs and the restructured book. So net NPL should decline around 1% for all the lower tier PSU banks in terms of Bank of India as well as PNB. That should boost the return ratio in terms of which would be led by the lower credit cost.
Right. Thanks, Rahul, for getting us the fundamental side of it. Now, if you see in the last 1 year, you have the PSU Bank Index, which has actually outperformed the private bank space as well. You have the Nifty PSU Index, which is almost surged over 60%, versus the private banks, which have seen an up move of around 14%. If you talk about YTD in terms of 2023 as well, that trend has continued, wherein the PSU bank index is up around 5%, whereas the private bank index is up around 4%. Taking the performance in terms of stock price into consideration and the valuations, let's look at the price to book probably. Is there further leg room for the PSU bank index from a valuation perspective to catch up with the private banks as well?
See, as I mentioned earlier, we do not see further re-rating or valuation catch up in top tier PSU banks, but we see re-rating triggers in the lower tier PSU banks like Bank of India and PNB, which have not which are yet to see the normalization of the credit cost in FY24. So basically, top tier PSU banks would continue to deliver market returns, but you will generate alpha and outperformance in lower tier PSU banks because there is a sharp trigger for the improvement in the return ratios.
Okay. But this is, I would think, something that can happen for the rest of the calendar year. But I'm just wondering when the cycle turns, and I think that sometime next year is when we're likely to see the interest rate cycle also turn. That's the broad expectation. That's generally when you see margins getting scrimped or collapsed for some of these banks, right? So is that going to be a major headwind that these banks will have to face?
So basically, in terms of the NIMS compression is one of the headwinds, but we expect that these margins are going to stabilize in H2 of FY24. So basically, we do not anticipate here the rate cuts in the near term, at least in the first half of FY25. So the phenomena, we believe that rate cuts would be likely beyond the H2 of FY25.
Right. So, Rahul, if you have to look at both the private as well as the PSU space right now, what would your top picks be, and where do you see good leg room of growth from a value perspective as well?
So, in terms of private banks, we remain positive on ICICI Bank, Axis Bank, and IndusInd Bank. In which, in the mid-tier private sector banks, the IndusInd Bank is likely to outperform versus the sector because if you look at the Q1 FY24 numbers also, the whole sector has seen NIMS compression, but for the bank, the NIMS was stable despite 30 basis point sequential jump in the cost of funds and deposits. So we believe that valuations are also lower in terms of 1 point. It is trading at 1 year forward of 1.7 times versus the ROE trajectory of 1.9 to 2%. So we believe that near-term outperformance can be seen in IndusInd Bank. Moreover, RBI approvals for the increase in the promoter stake is pending, which is expected to come in near term in the next 1 to 2 months. So we believe that in private banks you can see near-term outperformance in IndusInd Bank, and in PSU banks we remain positive on SBI, Bank of India, and PNB.
Right. Thanks, Rahul, for getting us the details as well. So these are the top picks of IndusInd, ICICI, and Axis from the private banking space. SBI is another one that you should be watching out for from the PSU space as well. And Alex, it's interesting to see because from a valuation perspective, if you see the private banks versus the PSUs are available at a discounted valuation of almost, if I'm not mistaken, 20 to 30%. And in the last couple of years, the trend that we've seen is that the balance sheet cleaning has happened. The PSU banks have actually now started giving out dividends almost after 2 to 3 years, right? So you're seeing that improvement that is coming in, and probably a lot of people are talking about that these could be candidates with regards to re-rating from a longer term perspective from here on.
Even the smaller banks, and I say smaller as a relative statement, but something like a Union Bank, we were talking about it yesterday. The fact that its profits have practically doubled in the first quarter, and all of the banks that we already discussed, the likes of State Bank of India, BOB, and PNB, have seen significant growth in profitability. So overall, of course, if you look at the pack as a whole, SBI contributing to a large chunk of it, but certainly the health of the sector as a whole is looking much better than it has in the past.
Absolutely. And this is going to be interesting to watch out for from the banking PSU space as well, though Rahul is not of the opinion that
Requires
the
a
PSU
re-rating.
bank requires a re-rating and there is leg room. But again, it's a very diversified view that we're
But
picking up
having
as well
said
on
that, I kind of get what he's talking about, because like you pointed out, over the last year, this pack has run up very significantly.
So probably from our stock performance
it's in the
perspective,
price.
probably it's priced in.
Yeah.
But moving on from the PSU banking space to another PSU that had its AGM yesterday, we have Coal India that has been in focus as well. The dividend yields always have been really positive, and that's where the investments usually come in for the counter. Rishi standing by to give us more. Rishi, what are you picking up from Coal India's AGM? What were the key highlights?
So particularly, the AGM focused a lot on its FY23 highlights, and I'll focus more on the non-financial highlights that we'll all be looking forward to. So first of all, Coal India accounted for about 79% of the overall national coal output, and apart from this, its coal production, it grew by 13% to 703 million tons, and for the first time, it has crossed the 700 million ton mark. So that's a new milestone for the company. Apart from this, it also focused more and more on building new rail lines for ensuring smooth transportation of coal from its mine to the end use industries. So particularly, it has built around 160 kilometers of new rail lines in the previous fiscal. Apart from this, it has also signed 3 MOUs, which were with BHEL, GAIL, as well as IOCL for coal gasification, its coal to chemicals business, as well as 2 MOUs that were also signed with respect to thermal power operations. Now, specifically for its coal mining projects, 24 coal mining projects have been approved with a total capacity of 140 million tons. And for the FY23 fiscal, it has announced a dividend of 4 rupees per share.
That's a significant update. Thank you so much for joining us and for giving us that perspective, Rishi. Coal India, one to watch out for. And interestingly, the price movement of Coal India over the last year or so, one can say, has not been what it has been over the last several years. And it's moved very significantly. But let's talk about several other stocks that you'd want to watch out for. And we've said repeatedly over the last couple of weeks that there is a lack of an overarching trend, but there's a lot of stock-specific action and a lot of news-based action. So Varsha is joining in with the first list of stocks that we've got today. Varsha, good morning. And what's on your list today?
Yeah, so a bunch of companies that one should watch out. Now, first company that we have is in news since 2 days, that is SJS Enterprises. Now, promoter Evergraph Holdings sold almost 29% stake in the decorative aesthetic solution provider for nearly rupees 550 crores through open market transactions. Now, after the bulk deal, Evergraph Holdings stake has fallen to 4.63% from 34.15% stake, while the combined shareholding of the promoters and promoter group has reduced to 21% from almost 51% in SGS Enterprises at the end of June 2023 quarter. Now, Aditya Birla Sun Life Mutual Fund, then Quant MF, then Sundaram Mutual Fund, then Morgan Stanley, and among others were the buyers of shares of SGS Enterprises in the open market transaction. Also, on August 18, ACE investor Ashish Kacholia sold shares of the company worth rupees 11.5 crore. Then the next company which we have has recently listed after demerger from Mirza International, Red Tape, which saw promoter Yasmin Mirza acquiring almost 15% stake by way of gift from Shahid Ahmed Mirza, then 16% from Tausif Ahmed Mirza, and 14% from Tasnif Ahmed Mirza. Now, Yasmin's stake increased to almost 50% from 4%, while the other 3 promoters' stake reduced to nil. Then we have Vascon Engineers. So, this construction company has received letter of acceptance amounting to rupees almost 605 crore from Bihar Medical Services and Infrastructure Corporation for construction of Lohia Medical College and Hospital, including hospital and residential building, Supol. Now, the EPC work order has to be completed within 36 months from the date of receipt of letter of acceptance. Then we have Aventil. Now, the company has received a purchase order worth almost 13 crore from Bharat Electronics for the supply of PA modules. Then the Paramount Communications Board has approved to acquire almost 100% stake in Valence Technologies for rupees 1.97 crore. This deal gives PCL a strong position in the telecom business while also adding market and product diversity in terms of water pipeline business. Now, last week, as I was saying that I would really miss the earnings season, we have Procter and Gamble Health Q4 FY23 results. So the reason I'm saying Q4 FY23 result is because company followed June to June fiscal year. Now the revenues were up almost 1.78% at rupees 301 crore, while the EBITDA was down almost 23% and margins were at 15%. Now, the company witnessed a category slowdown across portfolio, which due to this the revenue, there was not much growth in revenue. Also, the reported PAT, which is almost 29 crore, is a decline of 28%. Now, why? Because of the higher raw material cost and one-time employee cost.
Thanks, Parsha, for getting us the details. So PNG will be in focus as well, and overall, there is going to be some bit of pressure taking the numbers into consideration. But a whole host of other names that will be in focus, and one such that could see a block deal in today's session is a Coforge. We have Saloni standing by to get us more in terms of what's expected on Coforge and the other stocks that you're tracking. Good morning, Saloni.
Good morning. So as you said, first we have Coforge. So Hulse BV, which is an affiliate of Bearing Private Equity Asia, offers about 16.3 million shares in Coforge in a block trade according to the terms of the deal obtained by Bloomberg. So the promoter seeks to sell $893 million of Coforge stake, which represents 26.6% of the company's outstanding shares. The floor price has been set at 4,550 rupees each, which is a 7% discount to the stock's Wednesday closing price. Post this sale, Hulse will no longer own Coforge shares, and the book runner for the sale is IIFL Securities. Then we have Reliance Industries. So Qatar Investment Authority, through its wholly owned subsidiary, will invest rupees 8,278 crore into Reliance Retail Ventures. This investment values Reliance Retail Ventures at a pre-money equity value of rupees 8.27 lakh crore. This compares to the previous fundraise round by Reliance Retail Ventures in 2020 from various global investors for an amount of rupees 47,000 odd crores, which was done at a pre-money equity value of rupees 4.21 lakh crores. So this investment by Qatar Investment Authority will translate into a minority equity share of 0.99% in Reliance Retail Ventures on a fully diluted basis. Then we have news on Borosil. So a subsidiary of the company, that is Class Pack, had previously acquired 90.17% stake in Goel Scientific Glassworks for rupees 21.5 crore. Following that, Glasspack acquired an additional 4.56% stake in the company for rupees 91 odd lakhs yesterday. Then there is NHPC that signed a memorandum of understanding with Andhra Pradesh Power Generation Corporation for the implementation of pumped storage hydropower and renewable energy projects in Andhra Pradesh. Then we have a note from Bernstein on Paytm. So the brokerage gave Paytm an outperform rating with a 12-month target price of rupees 1,100. That implies an upside of about 31%. So Bernstein finds Paytm a dominant digital payments platform with a promising head start in the lending business to be on the right side of the disruption. So the brokerage expects Paytm's loan disposal volumes to grow sharply and achieve an estimated market share of 4% by FY26. And with stabilizing margins in its payment segment, the brokerage expects the business to break even by FY25 and generate an earning per share of rupees 130 by FY30.
All right. So it's quite a runway that they're looking at. Thank you so much for joining. I'm saying joining us. You're right here. Thank you so much, Saloni, for taking us through those updates. We've got a lot of updates coming in on the primary markets, and in fact, we've got a few IPOs that are already running. And Rishi is joining back to tell us some more about a couple of them. Aeroflex is one that you're talking about.
Yeah, there's Aeroflex as well as there's Vishnu Prakash Punglia that's coming, whose IPO is opening today. So firstly, I'll cover Aeroflex. It was the day 2 yesterday. Today is the final day of the IPO, and the IPO has already been subscribed by 21.1 times. And the maximum interest has been shown by non-institutional investors who have the segment has been oversubscribed by 46.4 times by retail investors. have oversubscribed the segment by 17.78 times. So for those looking at the IPO for today, the price band is at 102 to 108 rupees per share, and the lot size is 130 shares and its multiples. It already raised prior to the IPO opened on Tuesday. It already raised about 103 crores from anchor investors, and again, the interesting aspect in the Aeroflex IPO is the interest that is shown by a lot of marquee investors even prior to the IPO. For example, Ashish Koshale as well as Vikas Khemani's Carnelian fund, who took up stake in the company much prior to the IPO. Coming to the IPO that is opening today, that is Vishnu Prakash Punglia. It has a price band of 94 to 99 rupees. The issue size is 308.8 crores, and it's a 100% fresh issue. The issue opens today, as I said earlier, and it goes on till Monday, that is August 28th. If you have a look at its financials, its revenue was at 1,100 odd crores for the FY23 fiscal, as well as the net profit was at about 90 odd crores. If you look at the past couple of years CAGR, it has been at 55% CAGR with respect to revenues, and a net profit CAGR of over 118%. So that's really huge. If you look at what the company does, what's its business is, it's into engineering, procurement, and construction, with an experience in design as well as construction of various infrastructure projects for the central as well as state governments. And it has presence in about 9 states and 1 union territory. Also, an important indicator to look out for prior to the IPO opens today is that its shares were trading at a premium of 54 rupees in the grey market yesterday.
That's going to be interesting to watch out for how the primary markets stack up as well. Thank you, Rishi, for getting us the details. So, Alex, clearly, if you go to see, yes, there is stock-specific action, but since yesterday, we have seen some bit of movement that started to come in terms of the benchmark indices as well in the markets. Today's session as well, if you see GIFT Nifty, that is indicating a marginal uptick, and taking the global cues into consideration, there could be some bit of positive consolidation in the markets. Yes, being weekly expiry, bouts of volatility could continue to remain high as well. So watch out for all the action only on BQ Prime. That's all that we have on this session. Thanks for watching.